Company I'm not sure I would have tried to pitch this to Paul, to be honest. I'm not sure I'd have wasted my time. But JD Wetherspoons is very much the opposite of all those things. So when you think of JD Wetherspoons, before you get down to the investment stuff, what do you think? You probably think fairly consistent food across pretty much all of its outlets. The beer's reasonable. The thing is, most importantly, cheap. It's going to be cheaper than the next thing up the road because they will make damn sure that they are. Okay, so when you look at it as a stock, what do you see? Well, you see debt that's up from 780 million in 2019 that went to 991 million in 2020. You see basically bugger all free cash flow. There hasn't been any for a couple of years, and there's 20 million now, so a market cap of 740 million, which gives you a price to free cash flow of around 37. Unless you think this thing's going to grow like a weed, that's going to be an issue. And pretty low margins because they have pretty low prices. So, okay, what the hell is there to like about this thing? Oh, also the share count's up as well from the pandemic because, pandemic not very nice for these kind of companies. No one goes to the pub when you're not allowed out of your house. Tim Martin, CEO, spent a lot of time complaining about that. He spends a lot of time complaining about a lot of things, many of which I'm not sure I agree with, but we'll come back to him in a bit, no doubt, since I think you view him as one of the main negatives about this stock. Thing is, though, I think everyone's wrong about this. I was listening to what is rapidly becoming my favourite podcaster that's not you or me, Andrew Hollingworth, talking about Ryanair quite recently, and he was talking about Ryanair's business model and the way that it's managed to effectively carve out quite an impressive space for itself in what is an unpromising sector, in that case, airlines. And I think something similar here is true of Spoons. So if you look more closely at that debt that's been ballooning, you start to see a slightly different picture. So one thing to note about that debt is most of it was taken out before the pandemic. This isn't a case of company starts taking out loans to get itself through while it hasn't got any revenue coming in and its costs are all too high. Most of this was kind of pre-pandemic stuff, and 80% of it is fixed at 1.24% to 2031. 1.24% to 2031, I wouldn't take your debt at that. I wouldn't mind issuing some debt at 1.24% to 2031. If anyone would like to lend me anything for, well, basically any purpose, I'll quite happily take debt at that level for now. There's a lot of it, but we'll come back to that in due course, I guess. It's going to be a while until that becomes an issue, though. Interestingly, they said, look, we had two big equity raises, but that does mean that our debt to equity and our kind of net debt levels per share coming out of the pandemic were lower than they went in because they took out the debt before and then did some equity raising instead. And most of that is because they've been spending stuff. They've invested quite a bit into their pubs, extending them and buying freeholds. Buying freeholds should help in the long term, I think. It will stop them being tenants. It will mean they don't have to pay rent in the same way. They've been looking to buy upgrades. They are basically sticking their foot to the boards in investing at a time when everyone else in this sector is struggling. And they have pretty low margins because they charge less than everybody else. The thing is, though, I've heard it said about these that they don't have the ability to raise prices because they're cheap and their thing is being cheap. I don't think that's true. I think they do. Well, I do think their thing is being cheap. I just think that's consistent with them having the ability to raise prices. So go back a couple of years to 2020 and Rishi Sunak has just cut VAT on things like eating out and so on and so forth. What did all the pubs, pretty much all the pubs other than Spoons do, said, great, we'll have it. Prices stay the same. We just pay less VAT. We make money. What did Spoons do? Said, okay, prices come down. We'll make ourselves cheaper again. And that gives them a bit of room here. There's always been a gap between Spoons and their competitors in terms of pricing. That gap is now the biggest it's ever been. So I think when they need to, they've still got room to push their prices higher here a little bit. And they started doing it on food slightly, while still being way cheaper than everybody else. So anyone who is price sensitive will still be looking towards them rather than anywhere else. I don't think they need to just yet, and I think they are that committed to trying to keep their prices low to people that they will do it when they have to, not when they see an opportunity to. They've never been the kind of company to go for a short-term cash grab and risk their kind of competitive position here. So free cash flow at 20 million. They have a market cap of 740. And I guess to add to the kind of worry there, their revenues are back close to where they were pre-pandemic. So we're bringing in the same money here and we're making sod all in free cash flow. What the hell is going wrong? The answer is we're spending it. We spent 70 million of free cash on that bunch of extensions and acquisitions that I mentioned. So if you take that up to sort of 90 million, if you think they're one-off activities here or one-off investments that will help help expand margins, they won't boost revenues particularly, but they'll help move margins. And then we start getting to closer to 90, and on 740 now we're looking at closer to sort of 8 times free cash, which makes this much more interesting. Stock is down 52% over the last 5 years. They report earnings next week. They're down today because pretty much everything's down today, but this thing has been moving higher. It's about 15% up on the last week and a half or so, and I wonder whether the market is just starting to turn around for these guys a bit. I wish I had a bit more confidence. I'd probably try and buy them. Chances of me getting Paul to buy these, close to 0, I would think.
Yeah, I think you're probably right on that. Although I think it'd be for completely different reasons to me. My problem is that I think Tim Martin's a back, and I cannot buy companies in where I think the CEO is a back, and I struggled quite a lot during any kind of sort of political run up, in that he was basically just using any excuse to go on TV to whinge about conditions that aren't entirely suitable to him, rather than sort of like the rest of the industry is adapting to them. And one of his major whinges is that supermarkets pay 0 VAT on food sales. Whereas obviously, a Wetherspoons or a restaurant, they would actually pay 20% VAT on the food sales. But he has this weird idea that the supermarkets use this 0 VAT to subsidise the selling of beer, which is just like, he looks like he's perpetually drunk. He looks like the angry man in the pub. And this, is, where they're like shouting at the angry man shouting at the clouds kind of thing. And this is kind of the impression that I have of Tim Martin. I think he's made a rod for his own back, and rather than saying, hey, look, perhaps I didn't start Wetherspoons with the best business model ever, he's just angry at other people for having better business models. And that is my main issue with him, is that he is ready to blame absolutely everybody, but it's never his fault.
Fascinating guy. I sort of disagree with him quite violently on a bunch of things that I want to say have nothing to do with Wetherspoons. And by that I mean stuff like Brexit. But I mean, he kind of thinks it does because, anything that affects the employment situation in the UK probably affects Spoons indirectly of a sort. But his views on kind of Brexit, he's an interesting sort of character. He strikes me as one of these people who wakes up and spends pretty much every waking hour working out how to kill his competitors. And I kind of like that in a CEO. I'm very torn on the kind of CEO that he is. Michael O'Leary's another example. Mike Ashley is another kind of example. They're forever kind of sounding off, and they kind of draw your attention. I don't think Tim Martin does the same job that Michael O'Leary does. He annoys me slightly less, but if you see Michael O'Leary in an interview, he is forever talking about how low Ryanair's prices are. Tim Martin doesn't really do that in quite the same way. He seems to kind of grandstand a bit more politically about stuff that, as you pointed out, are largely sort of complaints, to be honest, like inequality between tax from supermarkets and pubs. And I sort of think, yeah, you're not wrong about that. We need to figure out how to kind of play the hand that we're dealt there. But I quite like this company's competitive position, for what it's worth. I heard one kind of idea which I think is wrong, and I will mention as a kind of counterpunch, or the most convincing counterpunch. I don't think any of these are great arguments against the stuff that I mentioned here, but here's something that I do think is wrong as a point in favour of it. I heard someone comparing it and Ryanair to Costco, which is basically the job is to get it into your customers' heads that you have lower prices than everybody else, so anyone who cares about price, it's not worth going elsewhere. That's absolutely true. That's what Costco tries to do, and what Ryanair tries to do, and what Spoons tries to do. But what Costco has that neither Ryanair nor Spoons has is a membership scheme. And basically, they have a way of getting their customers to give them money for nothing. Neither Spoons nor Ryanair does this. They both have to work on having effectively lower costs or using their scale advantage to negotiate better prices and then push that through to customers and then maybe raise them after and hope they don't leave. But the businesses aren't quite as sticky in this sort of way. So I don't think comparing it to a Costco or an Amazon, and I'm not saying they have anything like Costco or Amazon's scale, leave that thought aside for the moment. I don't think comparing them to those two is the right way to think here. I think, though, that there's a decent chunk of people who are kind of price sensitive and are pub goers by nature. So a slight price increase won't put them off, but they will look to go to the cheapest place. They will know what they like. They will stay there, and they will keep going to Spoons because they are Spoons loyalists. I think that the market's badly underpricing this at the moment, basically.
I think you could be right. I think the business model is, if you think about back to the beginning of Wetherspoons, is fairly straightforward from Tim Martin. He thought that he could essentially crowd out the market by being the cheapest, use any money he generates to buy more pubs and be the cheapest, and then when all the other pub chains fail, he would probably start cranking up the prices. And that was essentially the business model. Unfortunately, what's happened is that's not essentially as what has happened. But just to quote one last thing, which I've just remembered as you were talking there, Steve, of the irony of a man who cannot remember the things he said. He was once on, he was on Question Time during the Brexit debate, and he said that anybody who says that people will not come to this country and work after Brexit are simply being domesters. And in late 2021, he was talking to then Boris Johnson to say that the UK needs a more liberal immigration system. So the man can talk out of the two sides of his face, it seems, Steve, and he seems to get away with it, which is generally the case. If you was drunk the night before, you probably didn't remember what you said.
I wonder which one he actually thinks at the moment.